Kia ora, and welcome to the Cotality Property Market Update for Putu Te Rangi, March 2026. Brought to you by Loan Market. February's Home Value Index shows property values across Aotearoa grew by 0.2% over the month, which effectively cancels out the small dip we saw in January. This takes the national median value to approximately $807,000. While it is a lift, we remain a little cautious about reading too much into a single month of movement. Whether this is the start of a gradual upswing is yet to be seen. Looking at the bigger picture, home values are still 1.2% lower than this time last year, and more than 17% below the peak of early 2022. It's a tentative sign of a change in direction, but in a market where caution still abounds, it's far too early to call this a definitive change in trend. Across the main centres, the gains were more consistent this month. Kirikiriroa Hamilton and Auckland Dunedin both saw 0.9% rises, and Te Whanganui-a-Tara Wellington City showed a bit of life with a 0.8% increase. Tamaki Makaurau Auckland continues to be the most subdued, only managing a tiny 0.1% lift. While we still see some provincial markets in Te Waipunamu, the South Island, holding at record levels, for much of Te Ika Maui, the North Island, the market is essentially treading water. We are seeing some fatigue in activity, however. February saw just over 7,300 sales, which is down 6.8% on the same month last year. While the 3-month trend remains positive thanks to a strong December, the momentum has certainly slowed. There are positive local indicators starting to come through, particularly on new supply and the employment side. Building consents have continued to grow, up 9% compared to the same time last year, and the number of filled jobs also edged up in the latest figures. These are the foundations of a healthy market, but they are currently being weighed down by a lot of external uncertainty. We can see that tension in the buyer data. First home buyers are still very active, making up over 27% of the market. They are clearly taking advantage of static prices and the fact that mortgage affordability has improved to its best level in years, with the national average proportion of income required to service a mortgage falling to 42%. But for existing homeowners, the movers, it's a different story. Their share of the market has hit its lowest point in nearly 3 years. Even though the math of buying a home has improved, those looking to trade up or to a new location are clearly more tentative, likely waiting for more certainty around the labour market and the wider economic recovery before they commit. We're seeing that same search for certainty in debt structuring. Floating loans have dropped to their lowest share since 2024. Instead, more than half of borrowers are fixing for longer than a year, with the 2-year fix becoming the most popular term as people look to lock in protection against medium-term risks. That caution is reinforced by global events. The situation in the Middle East is the biggest unknown. Disruption in the Strait of Hormuz has pushed Brent Crude past $100 a barrel, creating a risk of fresh inflationary pressure on shipping and fuel. We are now in a waiting game to see how the Reserve Bank views these developments. While the OCR remains at 2.25%, the big question is whether this global volatility will force them to rethink the timing of their next move. Beyond the immediate economic shocks, it is also important to consider the structural changes to how we can borrow. Debt-to-income restrictions are now a permanent part of the landscape. While they aren't necessarily binding for most people while values are flat, they act as a structural lid on the market. They change the rules of the game for the next growth phase, ensuring that even when confidence returns, the market is unlikely to see the kind of rapid, debt-fueled escalation we've seen in the past. So while February showed a slight pulse, we're keeping a close eye on how things develop. The local fundamentals are showing signs of improvement, but the global hurdles have certainly become higher. We'll be here to track the data and see how the market handles the pressure. Stay up to date and download our latest reports at cotality.com/NZ. Follow Cotality NZ on social and subscribe to the New Zealand Property Market Podcast on your preferred platform. Mā te wā.